Alcoa beat estimates. Little light, though, on the revenue line. Let's break it all down in our wrap. Joining us now is one of the most accurate forecasters for Alcoa. That makes him a Bloomberg best. Brian Yu is a basic materials analyst over at Citigroup Global Markets. He's on the phone from San Francisco. Brian, great to have you here with us. So, beat on the EPS, but a little light on revenue. Your takeaway from this report?
Yeah, our take is that you're absolutely right. They came in with an operating EPS of 21 cents, which is a beat. Light on the revenues. Also notable is that when you look at their consolidated segment results, what they term ATOI, after-tax operating income, that also came in below our estimate. They had $451 million. We were $482. And really the upside in the quarterly earnings were primarily the result of a lower headline tax rate. The tax rate was 16%. They were guided at 32%. That's worth about 5 cents per share. So I think if you look at everything on an operating basis, it came in a little bit shy of expectations, primarily because they're. Oh, sorry.
Well, no, Brian, I'm just saying, is that a big disappointment? I mean, we've all been watching commodity costs soar. If they miss on the top line, and who really cares if they beat on the bottom line for tax purposes? I mean, it's a problem with the business, right?
Yeah, I don't think it did come in a little bit below, and it was because of revenues on the aluminum business. I think in order for this company to continue to drive earnings, you need to see higher aluminum prices going forward.
Brian, it's Julie here. So is it just a question of aluminum prices, or is there something that Alcoa can be doing differently to get those sales numbers up?
Yeah, outside of the commoditized piece of their business, you do have the downstream flat roll products and engineered. Those are areas of the business that are under control where they can potentially take share going forward. So, that is a possible source of earnings upside, but you would need, that's about 6 to 12 months out before I think you would see any major earnings acceleration.
Hey, Brian, it's Dominic here. One of the things they addressed possibly was slowing growth in China. Is that going to be a problem not just for Alcoa, but for other of these kind of commodities companies going forward as well?
Yeah, it's always a concern because China is such a dominant factor in any kind of commodities consumption. So if you see a 1 to 2% slowdown in China's GDP, it will definitely ripple through. In their press release, they're saying they're expecting another 12% demand growth in the aluminum market for 2011. I think that's a fairly decent number.
Hey, Brian, it was just last week that you downgraded Alcoa to a hold. How come?
Yeah, it's a combination of valuation, and then also we're not expecting further upside to aluminum prices from the current level. Largely because there is a lot of slack capacity out there. Chinese smelting production's down about 15% from mid-year highs in 2010. So if aluminum prices stay up or move even higher, I think you're going to see a production response from some of the Chinese smelters. While that may not cause aluminum prices to come down materially, I think at the very least it'll put a cap on where aluminum prices are likely to head.
All right, we got to run. Hey, Brian, thank you so much. Bloomberg best analyst Brian Yu of Citigroup Global Markets.